Trump seems to throw a curveball every other day, but to be honest, his actions regarding the economy, his actual policies, and his future plans are becoming much more predictable. Having said that, I have a fairly solid understanding of XRP and its possible price movement as the year draws to a close. I also wanted to share some important information with you all on the Fed and QE, or quantitative easing, and how these factors could affect markets in the near future. Although I wouldn't say in the near future, the current date is undoubtedly approaching, and it is inevitable that we will witness a significant shift in cryptocurrency assets from this point on. However, I want to start by discussing the last time the Federal Reserve used quantitative easing, or QE. For those who are unaware, quantitative easing is simply the process by which the Federal Reserve begins to print massive amounts of money and buy off the balance sheets of other large firms. As you can see, the first QE was implemented in March 2020 in reaction to the epidemic. At the time, the Fed had adopted a vigorous quantitative easing program that involved the purchase of over $700 billion worth of assets, which naturally led to an additional $700 billion entering the market. The Fed declared in November 2021 that it would start to slow down the rate at which it was buying assets. I want to show you guys something really fascinating now that we can also look at the price charts at this moment. As you can see, the market as a whole was in a bit of a slump in March 2020. In actuality, Bitcoin just experienced a 50% decline, going from over $10,000 per coin in February to roughly $5,385 per coin on March 15th. Additionally, there was a rather robust initial rally from Bitcoin following the Fed's implementation of quantitative easing. In May, it actually increased from $5,000 to almost $10,000 per coin. However, what transpired later in the year following a more vigorous QE, or money creation event, was just astounding. Bitcoin first rose from $5,000 to $40,000 per coin, and then it continued to rise until it reached $60,000 per coin in April. This was unlike anything that had ever been seen before and was very amazing for the period. And we witnessed Bitcoin rise to $64,000 per coin all the way up to November, when the Fed finally halted QE. However, once the Fed said that it would no longer engage in quantitative easing, QE, and instead adopt quantitative tightening, which entails hiking interest rates, shortly afterward there was another massive sell-off in the cryptocurrency market, and Bitcoin finally crashed to about $16,000 per coin. At the peak of quantitative easing, we were trading at $64,000, and only 5 months later, we were trading at $16,000 per coin. Therefore, while it is true that quantitative easing, QE, has a significant effect on the market, how long does it take for QE to affect the stock and cryptocurrency markets, and how can we make money off of this? As we can see from the previous example, when QE began in March 2020, there was a fairly strong initial effect in the first few months from March to May, during which time it increased by a very significant amount, nearly 100%. Shortly after, within a year or so, we witnessed the full impact of this, with prices ranging from $5,000 to $60,000 per coin. In other words, the markets reached these crazy all-time highs that were more than 10 times the price when quantitative easing first started, approximately a year after it started, and the markets really peaked around November 2021, which was approximately a year and a half later. Therefore, you can anticipate that most of the price movement will peak up and reach those levels approximately a year to a year and a half following quantitative easing. This is also true for many other cycles of quantitative easing. You can use the financial crisis of 2008-2009 as a point of comparison, as that was essentially when the Fed started printing money to save the banks. Yes, but a year or a year and a half after quantitative easing, to answer your question. Thus yet, we have not witnessed the full implementation of quantitative easing. Although the Fed has lowered interest rates, there hasn't been the same amount of money printing in Fed purchases as there was during the COVID era, which included $700 billion in asset purchases. Furthermore, there is no assurance that it will occur once more. I want to be really clear about that. My next point in this video is that the Fed will ultimately have to take action, or the U.S. economy would plunge into a recession. What is the purpose of the Fed's QE? The rationale for this is their desire to prevent negative GDP growth. Since printing money devalues the currency and raises the intrinsic value of everything else due to a weaker dollar, it's one of the simplest methods to make sure your economy is on track, inflation is constant, and asset prices keep rising. It goes without saying that your grocery and stock prices will increase. Therefore, the dollar's value naturally declines. Additionally, there are more dollars in circulation, indicating that more individuals are making purchases. Therefore, this is also beneficial for boosting the economy and giving businesses more liquidity so they can increase production. You know, similar tactics have been used by many different central banks over the past 200 years. The Dutch were the ones who first started this, paying mercenaries to essentially attack other countries and steal a variety of commodities from them. These days, when the US government needs liquidity in the system during pandemics or times of war, it takes similar actions. Although it's not always war, they do print a lot of money to increase liquidity, which naturally helps them expand the balance sheets of banks, businesses, and pretty much everybody else who is profiting from the increased amount of money in circulation. However, I believe that cryptocurrency is by far the most advantageous. This was evident when the price of Bitcoin increased by more than 10 times, and I'd like to be clear, QE has not been the driving force behind the present Bitcoin price action. ETFs have been the driving force, and that is still another significant XRP trigger. What's the deal then? Basically, we see the peak for Bitcoin a year or year and a half after each cycle happens. So when will XRP reach its peak? When will the price of a coin reach $5, $10, or $20? Since it depends on the Federal Reserve, the answer to that is somewhat complex, but that is what we must search for. Quantitative easing. How far along is the cycle and when does it start? You only need to ask yourself that. A year or a year and a half after the QE has essentially ended? You have to look. Well, that's when you'll want to be quite certain. In order to capitalize on the massive price activity that most likely occurred throughout the year-long to year-and-a-half time frame, you will most likely be selling some of your assets. That's all there is to it. Don't base it on a certain time or date. Make it based on the monetary supply and the Fed's actions, and you're going to earn the money that way. All right? Take note of the Fed's actions. Is money being printed? All right, excellent. We are aware that the tsunami will ultimately arrive, so take advantage of the low pricing while you can. Then simply watch for that gratitude to materialize. Even though what I just told you may seem too good to be true or too easy to be true, 99% of people on the planet are unaware of it. Therefore, folks, be sure to absorb all of that and purchase these dips. That's it. All things considered, though, BTCC is the greatest location to purchase all of these dips. Therefore, be sure to register in order to receive your exchange 10% first-time deposit incentive. Click the link below. Naturally, while you're down there, don't forget to hit the like and subscribe buttons. Goodbye, gentlemen. I'll see you later.